I would like to show you an example of a company which has very successfully accessed the private debt markets. A company called GPI Spa based in Trentino in Italy. The company is a leading provider of information and communication technology services, mainly for healthcare institutions. GPI issued its first private debt issuance, a 12 million euro bond with a tenor of 5 years and a yield of 5.5% in 2013. This compares to the company's latest bond issuance for 20 million euros at only 3% for a 5-year tenor. Whilst repeatedly tapping private debt markets, the company also completed a private equity financing and listings at Borsa Italiana's IM and MTA segments. As demonstrated by the dark blue line in the chart, during the period starting in 2011 until today, the company more than quadrupled in size in terms of turnover, going from 44 million euros in 2011 to an estimated 199 million euros in 2018. The company's successful growth strategy, as well as its access to diverse sources of funding, have also been reflected in the rating upgrade of Chervit in 2017 from B11 to A31. So, what does this demonstrate? Accessing the capital markets and alternative funding sources is often not only about satisfying a one off financing need. It requires an investment by a company not only in monetary terms, but also in terms of resources. Alternative sources of funding should be considered part of a company's strategic vision, as GPI has successfully demonstrated. A very unique and innovative example of alternative finance is a transaction which was structured by Banca Finint Group, the so-called Elite Basket Bond. The transaction is the first ever securitization transaction backed by a portfolio of mini bonds issued by 10 different corporates. Let us take a look at the structure of the transaction. The portfolio of corporates, all part of Borsa Italiana's Elite platform, is very diversified across different sectors. Every corporate issues a bond, all of them together totaling 122 million euros. The terms and conditions of those bonds are homogeneous, so pricing and tenor for all issuers is set at 4.3% for a 6-year weighted average life. These bonds are bought by a special purpose vehicle, Elite Basket Bond 1. This vehicle buys the individual bond issuances, paying the subscription price of 122 million euro, and in turn finances this purchase by issuing a note for the same amount. This single tranche asset-backed security is issued under the Italian securitization law, which represents a well-tested and sound legal framework for the issuance. The ABS notes yield 4%, again for a weighted average life of 6 years. So the terms of the underlying bonds and the ABS notes mirror each other. The slight yield differential of 30 basis points is set aside to cover fees and expenses at the issuer level. The transaction benefits from interesting structural features, such as the credit enhancement, which is fungible across the corporates and therefore creates a unique alignment of interest amongst them. The credit enhancement at closing is sized at 15% of the issue size, so 18.3 million euros. The credit enhancement can be used to pay principal and interest on the ABS notes. Who has invested in the transaction? The European Investment Bank and Cassa Depositi e Prestiti are the two main anchor investors in the transaction, alongside other institutional investors. What are the key successes of this transaction? Firstly, creating an instrument which provides small and medium-sized companies with longer-term financing and an interesting addition to their standard sources of funding, as well as secondly, structuring a transaction of critical volume, which also appeals to important institutional investors such as the EIB and CDP. Let us take a look at private debt from the investor's perspective. What are the main drivers for investing in private debt? Firstly, private debt tends to be placed at a premium to comparable but more liquid instruments. So for some investors, this is an interesting way of adding additional yield to their portfolio. Secondly, Private debt has a low correlation with traditional asset classes and therefore provides positive diversification. Thirdly, the performance of the asset class so far has been solid. Overall, investors continue to gain in experience in private debt as market volumes grow. Looking at Italian private debt funds, or mini bond funds as they are called, I would like to introduce an example looking at Finint SGR's latest fund, PMI Italia 2. The fund has a target size of 150 million euros. It's the natural extension of our first private debt fund, which was launched in 2013 at the inception of the market. Here are the most important investment criteria. The investment focus is going to be on SMEs for senior unsecured and secured issuances. The yield target is between 4 and 5%, with an average duration of just under 5 years. The subscription period is 12 months from launch, with an investment period of 36 months from launch. The seed investors in the fund are the Fondo Italiano di Investimento and Banca Finint. Lastly, the chart on the bottom right explains the cash flows and risk exposures of a debt fund, using as example Finint's PMI Italia 2. For the first 3 years, so during the investment phase, capital is called and invested. Consequently, the investor's exposure, as illustrated by the J-curve, is the highest at the end of the third year. Starting from year 3, distributions are going to be made in terms of amortizing principal as well as interest, and the investor's exposure reduces gradually.